Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. Happy Monday, everybody. All right, so we've got a pretty mild week coming up. So if you had already checked out the Sunday Raghee report or This Week in the Market show, you know that we've got a pretty quiet week, except for earnings. And this is where we've talked about really three calendars. Normally during the year, I'll use just two calendars. I'll take a look at what's going on over at Forex Factory. I'll take a look at what's going on over at Trading Economics, know where those FOMC events are. But now we're in earnings season. And if we're in earnings season, that means that we've got to keep an eye on those high concentration weighted stocks. And that's where I've talked quite a bit about Estimize, Estimize. And that's where I like to track well ahead of time. For those of you that are already subscribers or checking out This Week in the Market, we talked a bit about how it is that I look at earnings and the timing, the window of opportunity for that. So that's still definitely underway. And let's take a look at where we are this morning with the S&P, the euro, and bonds. Now, that's just a really quick way to take a look at, quote unquote, the market, right? What is it that's going on with treasuries, currencies, and indices? Those are three really easy ways to sort of get the pulse of what's going on. All right, so we've got the daily time frame of the S&P on the screen right now. By the way, I am on the TradingView platform. Love this platform. It's really my, I don't even want to call it my backup per se. It's a broker agnostic charting platform that runs all my tools on it. It means I can also pick up my phone wherever it is that I left that, and I can pull up a chart, get alerts, and see my indicators when I look at my phone. And for swing trading, it's really important. I don't know the folks at TradingView. I am a paying subscriber, have been for about a decade now, but I think it's a fantastic supplement to anyone's set of trading tools. And the way we look at the market, right? The way we communicate with the market is pretty much through our trading platform for order entry and our charts. So those are big decisions, right? Okay, so taking a look at the S&P, a couple of things to note. We are trying to get into that uptrend on the S&P. It's been battling it out. We're trying to get a more established uptrend. By the way, just to contrast the NASDAQ, which is already in an established uptrend, it's far easier to buy the dip. It's far easier to buy into support and have a higher expectation for follow through when we have a trend. So for example, on the NAS, a lot of really easy levels to watch. I've got a volume ledge right in here. Love this. You can see the volume sticking out here, right? Just jutting out from the right side. This is price-based volume, gang. Very different than time or date-based volume, which is what most people have when you get that histogram at the bottom of the chart. All right, the next thing I want to look at here is my daily price movement range. And I've got my DPMR zone in here as well. That's going to be volatility. So I've got volume and I've got volatility. So those levels are going to help me out with the NAS. Now, do I have necessarily the same confidence with the S&P? I think there are a lot of levels to like. Clearly, a little bit more of a neutral environment. Plenty of bullish momentum, though, which pretty much just points to a certain inevitability of moving into an uptrend. But I've got my daily price movement range. And look at this volume ledge in here. So there's a lot to like about a pullback into that level being a nice setup to the long side. So those are things that I'll look at there in S&P and NAS. How about what's going on with the dollar? To understand what's going on with the dollar, I'm going to take a look at the euro. We do have Christine Lagarde coming up, and that's going to put this level right there into focus. Both the daily price movement range and a volume ledge. What do I mean by ledge? Remember, gang, price-based volume or volume profile, right? That's the lingo. Means that I'm looking at how many contracts, how many shares, how many lots have already traded at a certain price level. It's not a projection, gang. I'm not a big fan of projections. It's actually showing us where people have dug their heels in and said, yep, that's where I'm going to get long. That's where I'm going to get short. It's a great place to say, okay, I'm going to measure bullish and bearishness from this level because we know people have committed dollars, right? Not just opinion, right? This isn't television. Not just opinion. They've committed dollars at that level, and this is where they're measuring being up or down from, right? So I literally imagine somebody's P&L moving higher or lower based on the way that they're positioned at that level. And remember, for every buy, there's a sell. You and I play in a zero sum game. So knowing where everyone is positioned, really important, right? Okay. So now I know that euro is overall in an uptrend. That's beautiful. If I can get some weakness like this is a fantastic opportunity, right? Within the context of something that we want to buy, think uptrend. When we have an uptrend, pullbacks, reversions to the mean, retracements, however you want to phrase it, this is buying the dip. This is buying something on sale. But alas, the old saying is true. Wall Street's the only place they throw a sale and nobody comes. But again, it's really important to know, why do I want this to begin with? And why is it quote unquote on sale? Why is it valuable? The uptrend is a big part of that. Okay. All right. Moving on then to the ZB, which is our long bond. Do I want to be a buyer in the ZB? I do. Do I want to wait? I also do, in many ways, want to wait. A lot of folks have been asking, Rog, what about metals? Means for sure I want to be looking for a long, wrong symbol, GC. There we go. I want to look to be long gold, but you know what we did last week? We went ahead and grabbed some silver, and that's where we are positioned right now in a pullback in silver, watching silver futures. Beautiful. What did we get last week? We got a good old-fashioned, I say old-fashioned, it's a pretty new tool. We got a good old-fashioned daily price movement range move. So we're going to see if we can't follow from there. All right. So with all that being said, that's a quick jog through the market. Again, if you're not already making it a part of your regular routine, couple things. On Friday, I posted a video called Lazy VIX. And why? Well, that's exactly what I meant. Why is the VIX lazy right now? Why is it a little complacent? What is it that we need to be aware of? What is the timing that might give us those opportunities to buy the dip, and where, right? And then I also gave y'all a sneak peek at this week in the market, and you can check that video out over at the Simpler Trading YouTube channel. All right. And again, if you're not already starting your week, or at least your day off with looking at Forex Factory or trading economics, and I hope everyone's taken some time to go establish just a free account over at Estimize. This is a fantastic site. I'm a little biased. The person that started this was someone I met back in my stock twits days. And it was a really cool concept. It was neat to see it come to fruition. Fantastic, very underutilized site as far as I'm concerned, to look at earnings in a way that's far more than this is what's coming up this week. Because frankly, that's not that useful. We want to be weeks and weeks ahead. And if you're wondering how company guidance and, what are the last few reports do, this does it all for free. When I find something free that I love, I absolutely love to share it with you all. Telling y'all, just sign up, check it out. I don't know these folks in terms of, I think he might have sold the site. It's a really cool service, all right? And it's something that we need to be aware of this time of year during this perplexing and rather irritating thing we call earnings season. All right, let's get into the questions. As always, thank you. Hey there, editor. Can we take a look at Visa? Sure. Let's jump on over here on the daily chart. Thank you for the time frame. I appreciate that. Time frame dictates time horizon, and time frame also dictates what's the psychology on the chart that we're actually looking to trade. And I do want to be a buyer. In fact, editor, Visa and MasterCard V and MA are the two most bullish stocks inside the top 11 stocks of the XLF, the financials ETF. So these are absolutely relative outperformers, but they're different than all the others because all the others are brokerages and banks. This is where it's a little bit different. And you can see the credit cards are doing pretty darn well. And I do like a buy the dip here. And I could say the same thing about MasterCard. They do tend to move pretty well together. Keep an eye on the daily price movement ranges. Keep an eye on the volume ledge. Look at this. Now, when you look at volume ledges, gang, I'm not going to get into the how-to too much. We have an entire course dedicated to it. However, take a look right in there. Okay, that's price-based volume support. Look how it's overlapping, a lot of proximity there to the DPMR. When we have a volatility level and a volume level coming together, Yahtzee, right? So I do like that one a lot. Editor, let's keep an eye on that. All right, Avi asks, is there a Darvis sell signal on the daily SPY? Well, I'm not going to look at signals on the SPY, my friend. What I will look at is the ES, but I'm happy to look at the SPY for you. But remember, when we're looking at the futures contracts, SPY, QQQ, GLD, SLV, USO, TLT, when we're looking at the futures contracts and there's an alternative, and there's an alternative symbol, in this case, the ETF, what we want to remember, sorry, again, just cleaning my glasses here. What we want to remember is look at the futures contract. It's a more complete view. Remember, most of these futures contracts are trading, 22, 23, almost 24 hours a day. So the view is so much more complete than a view of a 9:30 to 4 ETF. So with that said, ES is going to tell me what it is that I want to focus on, and as far as the market structure and everything else. So the question is there a Darvis sell? So I do not look at Darvis as a signal to enter. It's an automated support and resistance zone. So think of it this way. This is resistance. This is resistance. This is resistance, right? So are we coming up into a zone of resistance? Absolutely. Yeah, there is absolutely a zone of resistance. In and of itself, it's not going to get me in or out. Now I want to combine the Darvis in a neutral environment with, say, a slow stochastic. That's going to be my preferred. I've been using that thing for 25 years. Listen to me now, believe me later. 21K 3D, and make sure it's a slow stochastic. A lot of folks use a stochastic. We want to use a slow. A lot of folks use a far quicker K period, D period. We want to stretch that out. And this is what's been working for a long time for me, gang. So when we're trying to find an overbought level that might be corresponding with the Darvis, that's the way we want to set that up. Okay. It's just a classic setup that I've been teaching for decades. Automate the levels. Thank you, Darvis 2.0. And then use the absolute best indicator of overbought and oversold in a 21K 3D slow stochastic. Okay. 80 is the upper level, 20 is the lower. I'm giving you all the detail because it works. All right. Throw it on your chart. Use it in CHOP. How do you know you're in CHOP? Use the multi-trend, right? Use that multi-trend. Use the trade flag. So that's what I would look at there. Now, you bring up a great follow-up question there, Avi. Let's go on over to the 5-minute chart. What if there is an opportunity to day trade this? Let's go to the 5-minute and ask ourselves, all right, that's not what I wanted to do. Let's go to the 5-minute. I changed the wrong chart. There we go. Let's look at a 5-minute and ask ourselves, all right, where is the opportunity in terms of perhaps overbought or oversold here? And that's where I'll just defer to the hourly price movement ranges. I'll change my time expectation to be in the trade, aka the time horizon, and I'll just go from there, right? So if my time horizon's a little bit shorter, say 1 to 3 days, I'll look at the 1-hour chart. I'll look at this chart with the DPMRs. And if I want to be in this for days to weeks, I'll switch it over to the daily. Time frame dictates time horizon. So yeah, keep an eye on that Darvis zone, but we need a little bit more confirmation. All right. In other words, have lots of whys, right? How many of you have read Start With Why? Simon Sinek, I always think about him. Have multiple whys as to why you want to get into a trade. All right. KR asks, what percentage of accounts do I allocate for DPMR daily option position plays in cash? KR, what I do is I have separate accounts. I have a separate day trading account. I have a separate options trading account. I have a separate futures trading account. I have a separate swing trading account. So I rather allocate smaller sums of money in multiple accounts than put everything in one big account. Two reasons. And a mentor of mine told me this when I first started trading. Don't put all your money in one account. It's too tempting to spend it all, risk too much, right? If you have a smaller account, and you don't need a large account for day trading, by the way, the leverage usually and the cost is far lower. So my day trading accounts are smaller. My swing trading, which is where the DPMRs would come in, those are going to be a little bit larger because having an option with with more time to expiration is a costlier position to build. Having overnight exposure to futures contracts, day trading margin versus sort of normal overnight margin, far different a conversation. So it's not a matter of percentage of allocation. It's just I have different accounts for each one of those. And I like to separate my asset classes, Forex, futures, stocks, options, and the time horizon. So I'll have a daily account, sort of daily time frame or swing trading account, if you want to use that, right? Swing trading, and then I'll have a day trading account. So I separate it out. All right, next up, can we take a look at MS? Sure. On the 1 hour. I love the mention of the time frames. Thank you, gang. All right, so taking a look at the 1 hour chart of Morgan Stanley. I can't say that I want to be a short seller per se. I don't know that I want to be long either. Uh, just keep in mind the 1 hour. I'm not sure why I would want to focus on the 1 hour, to be quite frank, until it gets above the 200 propulsion. How do we see the 200 propulsion? It's real subtle. It's these white lines right there. Imagine what kind of information you would get if you understood when the 8 and the 200 crossed, interacted with price. This is for the 1 hour chart. That's going to be the equator, as I like to call it. I'd like to see it above that. If not, it's arguably overbought at a volume ledge and the 200, Robert. That's the way that I would look at that. All right. When setting an alert, what's the why the preference of last over mark? Mark is a weird sort of average. I want to see the last price, Patrick. It's really easy. Or the bid. Or the bid. Yeah, a last or the bid is the way that I want to look at that. That's my preference. Mark is the default, but I really want to see the last. All right. So let's go ahead. Actually, while I'm thinking about it, remember, gang, financials are not done. Let's jump on over to, actually, let me show you what I do with Estimize. And I haven't logged in on Firefox. Oh, you know what? Let me show you here. Okay. So here's Estimize. To start a free account, just use your LinkedIn, your Twitter, or your StockTwits. And while I'm talking about social media, gang, just for a moment, all right? I will never, ever, ever, ever DM you asking for money. I will never do that. My sister-in-law texted me, or I was texting with my sister-in-law yesterday, and she said, hey, I'm chatting with you on, I think it was Instagram. I said, oh, okay, which is hilarious because we weren't chatting. And she goes, and you told me that for only $25,000, you'll guarantee me 125% return. I said, oh, yay me. Gang, these people are impossible to stop. There is no way to keep up with them. So I appreciate you all reporting and all that stuff. There is no way. The only way to tackle these folks is to educate ourselves in the fact that they are going to be scammers like this. Their mothers must be so proud. And they're going to try to scam you in the name of many of us here at Simpler. We are never going to DM you asking you for money. And whether that's LinkedIn, Twitter, StockTwits, Instagram, oh my gosh, TikTok, which I don't even use that nonsense, is out of control. That's by far the worst. Please remember I won't. But anyways, I use my StockTwits login here. I just sign in, right? And I just give StockTwits permission to talk to Estimize. And boom, what I can do is start following. See all this? These are stocks that I've chosen to follow. Why have I chosen to follow these? These are the high concentration weighted names in the different sectors that I watch. And this allows me to see what's coming way up ahead rather than relying on some other site that tells you what's coming up this week, right? So if you haven't already checked that out, please, please do. We're going to be talking a lot more about earnings, I'm sure, in This Week in the Market. And in the meanwhile, gang, have a fantastic morning. I will see you all, my Sector Secrets folks. I'll see you all basically now in the Sector Secrets room. Everyone else, same time, same station tomorrow. All right. Be good to each other.